So I think option pricing is really, or option trading is really the difference between two people's expectation of the movement of the underlying stock price.
Yes.
Right.
Yes.
So if one person believes that over this period of time, the stock price is going to go up, he will buy a call option, and the other feels differently, he'll sell a call option. Right. And what we find is the typical trading period of these option traders is very, very small.
Right.
In India, again, as per the SEBI report you had quoted, about 35-40% of the option market is with the retail investors.
40%?
Yes.
And what about the cash market? How much is retail investors in the cash market?
So the retail investor interest in the cash market is slightly lower than that, but
It's lower than 40%.
Yes. Right.
So it is, that itself is quite extraordinary, right? Like, because options are like, they are supposed to be for the more sophisticated investor. You would presume that more institutions would be doing it.
Yes.
But what you are saying is actually retail is doing more options than
Yes.
Equity.
Right. And I think on this part about the term of holding, right? So one is retail is doing this whatever 35-40% of the option market, but it also needs a counterparty.
Right.
Right. And the counterparties are very smart algo and high frequency traders who have come in, and they actually come in because there's a retail participation. So it's
Right.
not that they would be there if so to your point, in the cash market, retail is buying it, but there are institutions, insurance companies, mutual funds, etc., who are also buying it. Right.
Right.
They would be there irrespective
Of whether retail is
retail.
Yeah.
Here, some of these traders are coming in to profit from the fact that you will counterbalance and become a counterparty to the retail option traders.
Right.
And the point I was trying to make is that typically we are seeing a retail trader, and I won't call him an investor in this option market, is holding these options just for 30 minutes. Right?
30 minutes.
30 minutes,
Okay.
right? So these trades are just being done. These are just 30-minute bets that are being placed
Yeah.
on which direction the stock price will move,
Yeah.
or actually the option price itself will move.
Yeah.
And what is more interesting is the high frequency traders who are there and who are arbitraging these opportunities, their average holding period is just 3 seconds for an options contract.
How do you hold something for 3 seconds, Ashish?
So basically, you are just buying and selling and making most of.
So the machine is constantly buying, selling, buying, selling, buying,
Yes.
selling, right?
Right. So in that sense, to your earlier point, are they looking at the discounted cash flows, etc.? The answer is no. They are just trying to predict which way the price of the option, let alone the price of the underlying share, is going to move in the next few minutes or next few seconds.